Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. So markets has been roaring, mid cap and small cap are also performing and hitting new all-time highs. Where should you park your money? Large caps, mid caps and small caps. Well, if you look at the last momentum for last couple of months, especially from the August, large caps are strongly outperforming, especially the Nifty, which has gained the strong momentum comparing it with the mid cap and small caps. Uh, and if you look at largely, it was led by ITs, Reliance, banks, couple of banks, not all banks, but yes, Bank Nifty is underperforming against the Nifty. But if you look at the Nifty, is strongly outperforming against all this sector. If you remember, in Feb, I guess precisely 17th of Feb, we released a video that small cap will outperform against the Nifty. And if you look at since the Feb to July, or I would say end of July, small cap were strongly outperforming against the Nifty. And then when the August breakout happened, when Nifty moved out of the range in June and July, large caps or Nifty outperform against the mid cap and small cap. But if you look at the momentum now, it's been slightly, we think that now it could be a pause to the momentum for large caps, and mid cap and small cap will take over. In the same video where we highlighted the Nifty small cap to ratio charts, look at this first chart over here. This is the weekly chart of CNX small cap, which is Nifty small cap to Nifty 50. And the same chart we highlighted in us the video which was released in Feb, indicating that the bullish head and shoulder breakout which has happened on this chart will take small cap much higher than the Nifty, and that breakout was after a multi-year underperformance of small caps. Now it rallied by around 27-28% post breakout, which means that small cap outperformed by around 25-26% against the Nifty, and then it retraced back towards the lower level. So if you look at the second chart over here, these retracement is right at the support level, or I would say the dip which happened from July or end of July to the September. It has been taking support at the rising channel over here. Plus, the most important part is over here is that golden ratio is visible on the moving range. So basically, golden ratio is, or golden cross ratio is what is within that when my short-term moving average takes over a long-term moving average. So in 50 days taking over the 200 days average. In this case, I have used exponential moving average. Generally, the golden cross is the simple moving average. But even if you look at the EMA, which is exponential moving average, the theory plays same. So if you look at first time since 2014, the golden cross is visible on the small cap to Nifty over here, and this is very strong comparing with the Nifty. So this indicates that there is still a huge room for small caps to outperform against the Nifty. If I just look at the history, what happened in 2014 when the golden cross happened, the outperformance was around 46% for small cap over the Nifty. And if in case history repeats, we think that there is a huge potential for next one year. Probably by end of 2022, we might see that small cap strongly outperform against the Nifty. So you should not miss this scenario or opportunity where the small cap is outperforming against the Nifty. If you look at the small cap index chart over here, the third chart, this is very indicating a strong bullish scenario over here. So price is breaking out, retesting those levels, again breaking out, retesting those levels, and now the fresh momentum breakout is visible where small cap is trading at all-time high. And again, as I said, the reversal which has happening in the ratio chart over here, indicating that the outperformance could continue for small cap after a dip or after a breather for small cap, and we are heading for much higher into the small cap. If I just go to slightly lower time frame, comparing with the on the small cap index chart, the same breakout, which was a recent breakout, is in the form of cup and handle. So cup and handle is basically the bullish technical pattern, which indicates that the momentum after a consolidation is breaking out in a stronger way towards the new highs. And even if you look at the momentum, it was breaking out with the gap. So when these patterns break out with the gap, indicates that the momentum is very strong for the bulls. And there is a candlestick pattern called gapping play, and that indicates that when the gapping play pattern happens, the momentum on the positive side continues. So again, all the structure over here, the ratio chart, the CNX small cap indicates that we are heading for a huge bullish momentum for small cap index. And in case, I would repeat, in case you have missed the 17th Feb video, go on to our past videos and you can watch that video where I highlighted the bullish head and shoulder breaking out of the ratio chart, and small cap will strongly outperform. I believe 2022 might be the year for small cap as well, and you should cherry pick the stocks which will be out of these small cap index, and keep a watch on that. So signing off. In case you think that our videos are helping you out, do not forget to comment and click onto the subscribe button in case you haven't yet subscribed to our Equity Master channel. Signing off, Brijesh Bhatia.